The Reserve Bank is keeping its glass half full view of the economy, despite a new report forecasting a slump in housing activity next year. The RBA Deputy Governor, Philip Lowe, says the fundamentals of the Australian economy remain strong, but it's up to business and government to boost productivity. However, economists warn the economy is heavily dependent on housing activity, and even a small slowdown in 2016 could spell big trouble. Neil Woolridge reports.
The Australian economy is barely staggering along, but the Reserve Bank says there's a risk we're becoming too pessimistic.
These fundamentals are strong, and they do provide us with the basis to be optimistic about the future.
Despite that optimism, the RBA has joined a growing chorus concerned about the housing market.
At 600,000 I bid, ladies and gentlemen. Sold! Congratulations, sir!
A new report by the Macquarie Group is forecasting a 7.5% fall in house prices from next year, amid signs that credit growth and auction clearance rates have peaked.
The risk of developments in the housing market derailing the economy has increased a little bit. The risk in the housing sector is higher than it was a few years back.
My big concern is the strength in the housing sector we are seeing could be close to a peak, and it may well wane next year. And meanwhile, we aren't seeing a lot of the transition from mining to non-mining in terms of investment.
Philip Lowe says measures to cool the housing hotspots of Sydney and Melbourne are sensible and are working. He says the best thing for the economy would be for house prices to keep rising, but at a much more subdued pace.
People do need to be careful here, because house prices aren't going to continue to rise much more quickly than income. Debt levels can't keep rising faster than income.
We are seeing a pickup in the supply of housing, and that should act to moderate the pace of growth in house prices, but we're not taking the next step and saying that that's going to deliver a decline in house prices unless we do see a significant pickup in the unemployment rate or in interest rates.
However, economist David Bassanese says while building approvals are strong now, if they don't keep rising, GDP growth will suffer.
The contribution to growth, if you like, will drop away to zero if building approvals level out. Now, if building approvals actually start to fall, then the contribution to growth turns negative.
For now, though, Australian businesses are feeling better. While growth is expected to remain below trend for an extended period, NAB's monthly survey shows business conditions remain above average, while confidence jumped in September along with employment.
And that was the first positive read since mid-2011, and that's bringing it more in line with the official data around employment, which has been quite positive of late too. We think that is consistent with the pickup we're seeing in business conditions in services sectors of the economy as well, which are large employers.
The next challenge for the RBA will be rising interest rates in the United States. Philip Lowe says that will have a major impact on currencies and on capital flows out of emerging economies. But he argues higher US interest rates should be welcomed as a sign of the underlying strength in its economy.
The low interest rates are symptomatic globally of a lack of investment opportunities and a lack of growth. And a return to something more normal, I think, would serve us all well in time.
Some words of reassurance for the anxious investors who see the glass as half empty.